Greetings fellow investors, welcome to NordicFinans, where we help you realize your financial goals. In today's video, we'll show you how to buy ETFs in Europe. My name is Lucas.
And I'm Markus. And before we get into the video, let me ask you this. Have you invested in the subscribe button and deposited a like yet? NANI?
Nice. Okay, with that, let us get started. ETFs, let us first shortly explain what they are for those who are uninitiated. An exchange-traded fund, or ETF, is a type of security that tracks an index, sector, commodity or other asset, but which can be purchased or sold on a stock exchange the same as a regular stock. Already here you can see that it's quite similar to an index fund, the difference being that you can buy and sell it in real time just like a normal stock. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. ETFs can even be structured to track specific investment strategies. And this is all according to Investopedia, our old friend. So if that isn't immediately clear to you, don't worry about it. I'll try to explain it in more simpler terms. Usually when I try to explain what an index fund is, I liken it to a pie, a big pie, which is sort of baked to look like the much greater pie that represents the stock market. Now an ETF doesn't necessarily work quite the same way because it tracks usually an individual part of that pie. So it might focus on the tech part of the pie or the total market, and then it only tracks the tech sector. But it can also track the overall pie, and this will become, I think, more clear when we dive into how to buy them and we look a bit at the specifics of what they track.
I think that you also can say that ETFs, they usually track either regions as some asset classes or bonds, for instance. I know that there are even ETFs now that follow crypto, and that's a very good way to spread your risk, so to say, that you're not just, for instance, if you're buying crypto ETF, you're not just buying Bitcoin, putting all your money into Bitcoin, and you don't either have to go and buy a bit of Bitcoin, a bit of Ethereum, a bit of Dogecoin, for instance, but instead you can buy this ETF that tracks all of them at the same time. Whenever one of them goes up, the ETF could be a little bit more valuable. When it goes down, it kind of balances itself all the time, but you're investing more into the crypto space, so to speak, kind of like you would in an index fund.
But I think that's enough said maybe about what an ETF is.
Yeah, I think so too. We could instead jump into what kind of ETFs there actually are. And for the purposes of this video, we're actually going to use Degiro, a broker I've been using quite a bit. Okay, so here we are, here on my screen now. I've typed in ETFs here in the search bar, and this can come up if you select all ETFs. So here you can, for instance, see which kind of investment firm actually has these ETFs. There's a lot of different ones that offer different kind of ETFs. I know that iShares are pretty common, Eurostoxx, Amundi. There's all these kinds, and this name doesn't really matter all that much because you're not investing into this investment company. They might have different fees though, so that's definitely something you want to be looking at. Degiro actually has some commission-free ETFs that you can utilize every month, but we can get more into that at the end of this video. Okay, so if we're gonna take an example here, for instance, we have the iShares. So this is just provided, I think it's BlackRock. So they are providing this ETF that they have put together. It's passively managed though, so you're not investing into a fund managed by a certain person or something. You can find what they're tracking here. And here, for instance, we have the iShares that shows that this is a BlackRock ETF. Okay, so if we're going to take an example, we're going to take this one that I've actually myself invested into. This is the iShares, so it's provided by BlackRock. And this ETF follows, so here in our example, we have the BRIC ETF. So this invests in the 50 largest companies in Brazil, Russia, India, and China. So this is a regional ETF. It follows certain regions of the world, and it invests in the largest companies in these regions or countries. And if we want to know more about the ETF, because as you can see, there's not that much information provided, you basically have a chart that you can look at here, and the growth of the ETF over time. You can instead select Asiakirjat, or whatever it is in your local language. It's basically a fact sheet, and you have to download this PDF, and then you get this nice little fact sheet here. So as you can see, it is an iShares ETF, which means it's by BlackRock. And here you have key investor information. And a lot of this is the same for at least the ETFs I found on Degiro. But it's really important to actually see what is the goal of this ETF and what are they tracking. So here, for instance, you can see that the index measures the performance of the 50 biggest companies in Brazil, Russia, India, and China by full market capitalization. So what this means is that if you are a bit bullish on maybe these regions, these countries, this ETFs could be a good choice for you if you don't want to invest in certain companies of these countries. You just want to have exposure to the regions themselves. For instance, I was a bit bullish on a few of these countries, so I chose to invest into this fund. Here you also have some risk and reward profile, so they are basically measuring the risks, but this is generally always high for ETFs because you can again lose all your money potentially. That's pretty difficult because then most of the companies in this ETF would actually have to, I guess, go bankrupt. Now, what is very important here just to see is that here they actually mention in the fact sheet, your shares will be distributing shares, i.e. income will be paid on the shares semi-annually. So they are distributing and accumulating ETFs, at least on Degiro. I would guess that it works so with all brokers. What that means is that you can either have ETFs that reinvest all the dividends that they collect to increase your overall position in the ETF, or you can receive a dividend, in this case semi-annually, so you get a little bit of cash back, so to speak, during the year. This fund, for instance, is a dividend paying stock, so since I have bought a small position into this ETF, I will be paid out semi-annually a small amount based on the performance on this ETF. So this is a good way to actually get some cash flow from your investments as well, especially from ETFs, as this could be deemed less risky than investing in just specific companies and hope that they pay out a dividend and that it's large. This way you can ensure that you will at least get some dividends, since you are buying a whole basket of companies instead.
Can I ask a question about that? Is there a way for you to affect that? Can you choose to not get it in dividends, or do you have to?
No.
Just pick another ETF. Yeah, okay.
Yeah, you have to. If you are not happy with receiving a dividend, or you want your dividends to be accumulating, then you simply have to buy a different ETF instead. There are, though, generally a lot of different versions of the same fund. So this one is BRIC 50, so Brazil, Russia, India, and China distributing. But you might also find a BRIC, Brazil, Russia, India, and China that is accumulating, that is reinvesting the dividends if you want that instead.
Where do you see that information then? Is it in the name, or is it?
Yeah, it's in the name of the fund in Degiro. Generally, it should be right here. It should say either AC or DIST, and DIST stands for distributing, and AC stands for accumulating. However, I'm gonna show this last page as well, because here you have the charges, and frequent viewers of this channel knows that me and Lucas are pretty concerned about the charges of any type of financial instrument we are investing into. And in general, the fees for the Degiro ETFs are pretty low, but you can see here that we have almost 1% in ongoing charges. And this you should pay attention to, because this is certainly not the same for each ETF. Then we have the past performance, if you want to share this. Now, I'm not sure how helpful this actually is, but if you want to do some due diligence, of course, this could be good to look into. However, I think that's it for the fact sheet. But now that we have gone through all this fact sheet, it all looks good. We could also check one final thing that I want to show to you. Degiro actually offer monthly free ETFs as well, commission-free ETFs. And if you're interested in ETF, this is definitely something I think you should be taking advantage of, because every month you can actually buy and sell some ETFs commission-free. And that's a really good thing, because you can save on some charges. Not all ETFs are in this commission-free program, and I don't think it's necessary that you should base your investments solely on which ETF is free each month or anything like that, but it's definitely something to be aware of, as you can use this to lower your total commissions a bit. But then when you have picked one here, we chose iShares Brazil, Russia, India, and China 50, for instance. You can just go to Degiro, And like a normal stock, it actually works that you only hit the buy button and then you buy it just like any regular old stock. So you can put in how much are you willing to pay for it. You can see that the current price is a little over 30 euros. And then how many you want. For instance, 2,500. And then this is what I would have to pay, and you just place the order. And if you didn't pick a free ETF, then there will be a fee about 2 euros, and there might be a percentage based on your purchase as well. But if you select the free ETF, you could buy one ETF free every month. Once you have placed your order, it should be all good.
And that was one of the differences between the exchange traded funds and index funds, that index funds you're going to have to wait 2 or 3 days before the transaction actually goes through, and these you can trade sort of in real time. As long as the market is open, you can buy and sell these like that.
Yeah, like shares.
So now, since we've already showed you the Degiro and showed you how to buy ETFs, if you're more interested in buying how to buy individual shares and how to enter individual stock positions and how to do that properly and so that you don't lose too much money in the beginning, I definitely recommend that you check out our How to Invest, the investment cycle sort of playlist that we have on our channel. We'll link it right here and we'll link it in the description as well. So that's a great place to get started when you first want to get into investing in individual shares. But I would also say that if you are a complete beginner, try to start putting more money maybe in the beginning into index funds, into ETFs, because it's just gonna be a lot harder to mess up as long as you're consistent with it. And then in the beginning you can put like a bit less in individual stocks, and then when you feel like you've gotten more confident with it and you feel like you know what you're doing, then you can start putting a bit more. And with that, all that's left for me to do is wish you guys happy investing.
Happy investing, guys. And mind those fees.